So I think ultimately it was a very dovish speech from Janet Yellen arguing that financial insecurity, financial concerns are not a reason by themselves to raise interest rates. I think the implicit message from the Fed chairman once again is that this is a central bank chairman very focused on driving down unemployment. And I think that indicates to the market that even if we get a strong number in tonight's non-farm payrolls report, this is a Fed which is prepared to be very patient and is going to delay rate hikes probably deep into 2015. The numbers were really horrific. I mean, down nearly 3% at an annualized rate. I mean, actually worse than the worst quarter during the global financial crisis. I think what really matters is what lessons do we draw from this? What's really the underlying story here? And we knew there was going to be a pothole in the first quarter due to weather effects and due to the need for the economy to work off inventories which had been built up in the final 6 months of 2013. But that pothole is certainly bigger than we'd appreciated or had forecasted. So I think the key now is how quickly does the economy bounce back? That's why numbers like tonight's non-farm payrolls report are very, very important. How much momentum has this US economy regained? And critically, how much is it going to sustain moving into the second half of the year? I think you need to see growth rates really in excess of 3% annualized for the third and fourth quarter to really shift the needle on the Fed's assessment that they probably won't hike the Fed funds rate until probably around the middle of next year. But really, how much momentum has the economy regained? How quickly is it growing heading into the third quarter? Those non-farm payrolls numbers tonight, an important signpost on that. Well, I think a lot depends on what we get next week in the budget, when I think the rubber is really going to hit the road for the new administration. We're really going to get some meat on the bones of what the government's strategy is. We're really going to discover where we're going with what I call modification. So I think that really domestic developments for the rupee are going to be as important as the global backdrop, the international context, particularly what's happening with markets' views on US interest rates. I mean, turning to those domestic factors, I think hopefully the stage is set for a positive budget next week by Finance Minister Jaitley. We know that the fiscal inheritance from the outgoing administration is a meager one, that 4.1% deficit target is under pressure. But I think all the noises, all the briefings from the new administration are that they are prepared to take the tough choices, that they will prioritize fiscal discipline in the short term. They will tackle some of the thorny issues around controlling the subsidy bill, broadening the tax base. And I think if we get that, those type of measures next week, then the rupee can continue to stay pretty underpinned, certainly at around current levels, maybe even strengthen slightly further against the dollar over the next quarter.